Good morning and welcome to the my Mortgage Spotlight episode number 18. I was just thinking it was Mortgage Spotlight number 17. It is 18. Sorry, I'm coming after a quick break. You all know me. My name is Wilson D'Souza. I'm a mortgage agent with Mortgage Architect. And today we are going to cover the important topic. It's already there in the um, on the screen. So we are going to talk about a few frequently asked questions regarding the mortgage in Canada. One of the frequently asked question I get is you must have perfect credit to qualify for a mortgage. The answer is yes and no. If you have a perfect credit, you will be able to get a financing from a well-known lender, the major banks, with a good rate. And if you have a genuine story to mitigate your credit, then even though your credit score is low, and if you have a story backed with the facts and figures, yeah, the A lenders, means the major banks, may consider you for your mortgage. So if you don't have a perfect credit and if you don't have a perfect story to tell, and you have some alternative solutions, you should be talking to your broker about it. Also, if the bank says no, there are several solutions available for you. So just don't get disheartened just because you don't have a good credit and you cannot get a mortgage. Contact your mortgage agent or a broker, or he or she will be able to help you with the mortgage. Of course, the rate may not be the good rate, and when you go for alternative solutions, you may have to come up. May have end up paying a little bit more interest. And if you have a really bad, credit, and if you can put 20% down, and it will be a bit challenging, but you will get the financing, but it is not impossible. All right. I don't want to talk too much about it. Best thing is I'm just answering the question, the related to the subject, in the sense you must have a perfect credit to qualify for a mortgage. My answer is not necessarily that you have to have a perfect credit. Even with a bad credit, you can get a mortgage. Once again, speak to your mortgage broker or a mortgage agent or a mortgage specialist, whatever you call. All right. My second question, which I always get it, putting 20% down is a must to purchase a home. Again, answer is yes and no. If you're buying an investment property, yes, you have to put 20% down payment to get financing from a traditional means like a banks, alternative lenders. All right. And if you're buying for your first time, or if you're buying a principal residence, even if you have a current residence, you're moving, and that current residence you're going to rent it and moving to a new place, you can put as minimum as 5% down payment if the property is under 500,000. All right. If it is more than 500,000, till 500,000, you put 5%. Anything over the 500,000 limit, I think I said 5,000. Correct. I'm correcting that. It is a 500,000. Less than 500,000, you're going to put 5% down. And the property value is more than 500,000, from 500 to 700. Let's say you bought a property for 700,000. For the first 500, you're going to put 5%. From 500 to 700, you're going to put 10%. That means, so for 500,000, 5% down payment is 25,000. 500 to 7, that is 200 extra you're borrowing. So that on 200 you're going to put 10%. So 25 plus 20, your total down payment required is 45,000. Hope it is clear for you. And I hope I answered this question. This is frequently I get whenever there is a mortgage inquiry, and I believe the next time if they ask the same question, I can tell them to refer this video and get answers from here. That's the reason, that's the purpose of making this video for all my clients and the future referrals. Okay. And my third question, pre-approval and pre-qualification are the same thing? Absolutely no. A lot of people in the market today, they call pre-qualification as a pre-approval. There are a lot of apps, even we have an app, 60-second pre-approval. Within 60 seconds, you can get in pre-approval. Actual, the pre-approval means it is just like it should be like a mortgage application without a property, which means you're giving a complete information about your address, employment, liabilities, assets, everything, and we put all those in the application and verify whatever you information which is given to us with by means of the documents you provide. Also will pull the credit. All right. So pre-approval is just like any solid approval. That means we have verified your documents and you're good to go. Pre-qualification is just based on the information what you give us or give it to your lender. He or she will give you a dollar amount without verifying what you said. In that process, there are a lot of loopholes. There are so many things you may think it is the right information, may not be the right information to the lender. So, for example, you might have a car loan or car lease, you may not disclose to the lender. You might have a huge debt, student loan, you may not disclose to the lender. And also, the best thing is the employment. You may think your income is X amount. It may not be the right amount which you told to the lender. I mean, if there is a difference, whatever based on the information what you gave, the lender gave you the dollar amount which is incorrect. I hope I answered this question to you guys. Pre-approval is totally different than pre-qualification. All right, there are two different things. And another uh, frequently asked question I get is which factor to consider while choosing fixed and a variable rate. First of all, if you want a peace of mind, you are a person with a fixed budget and you are not willing to take any risk, go with the 5 years rate. Okay. And if you can tolerate market fluctuation, go with variable rate. Historically, people who stayed with variable rate, they have gained over the fixed rate people. Another reason, my advice for the people, this is my purely my advice, my opinion, and 99% of the time I'm right. Maybe there is a 1% chance that I may go wrong. I tell everyone to stick with variable rate. Reason being, 3 out of the 5 mortgages are broken inside 5 years. So if you are in a variable space, you are paying very minimum penalty. There could be various reasons. Pandemic has done a lot of things in our life. Our lifestyles have changed. People are relocated, and if you break that mortgage, if you're on a fixed rate, you're going to pay your arm and leg in terms of penalties, because the fixed rate mortgage penalties are calculated on an interest rate differential, where the banks make a lot of money when you break the mortgage. They're happy when you break the mortgage. If you have a variable rate, you end up in paying only 3 months interest penalty. That's another reason. Stay with variable, or if you're not in the variable, next time when you renew a mortgage, stick to variable. Today, is it a good time to talk about variable mortgage? No, the prime has gone up. It has gone up considerably. I'm forecasting it will go up another 50 to 75 basis points up in a month's time, but it won't stay there. It will come down over the period of time. So you will also reap those benefits when the prime rate comes down. Uh, you can also take the advantage of those lower rates. When the rate drops down, you're paying more to the principal and less towards the interest. All right. And another question: how would you pay? What is the impact of unemployed status of mortgage? I know it's a kind of silly question. If you are in the market and if you don't have a house and if you're unemployed, don't even shop for a mortgage. How would you pay your mortgage if you're unemployed? After getting the mortgage, there is totally different scenario, because after getting the mortgage, you may have unemployment insurance. There are some lenders offer job loss insurance. Even if you lose your job, you can pay your mortgage through the insurance. There are many avenues if you lose your job while having a mortgage. But before getting a mortgage, if you're unemployed, well, it is lender will not buy your story. And again, however, if you're unemployed with no income, we cannot help you till you get your employment. This is the straight answer to your question. Hope you guys liked my 2 cents about this frequently asked questions. I hope I answered your most of the questions. In case if you have more questions, please feel free to write us below this video channel. I think we are streaming on Facebook and YouTube. We have a YouTube channel. I have very few subscribers. I need your help. If you like what I say and what I've told you, please subscribe to my channel and also spread this word. And if you think that this information is useful, share this information to your friends and newcomers in Canada. Thank you for watching, and I will come back to you soon, either in a couple of days' time or within a week's time, with another interesting topic which I want to tell you today. Rates have gone up, and I cannot pay my mortgage. What are the solutions? I'm going to come up with some of the tips. Stay tuned and tell this to your friends, and it will be a cool topic to cover. I will be covering either within few days time, or I'll promise you I'll come back next week. Thank you for watching. Stay tuned. See you, and have a beautiful day, and enjoy your day. Thank you. Bye bye.